Ron Plain is our marketing analyst this week. While the USDA did in fact lower corn production in its October crop report, hog prices have rebounded, making input costs a bit less severe. The 2012 corn crop is projected to be the lowest yielding since 1995, yet farrowers are only expected to lower numbers slightly. Many analysts believe a large amount of planted corn acres next spring, coupled with tight pork supplies, could support the market. Losses were extreme at the beginning of September when we last talked with Ron Plain, but as he said on Wednesday when we talked again, hog producers have seen a big change from a month ago.
Yeah, it's been rather dramatic, Jeff. We saw hog prices drop from the 90s on a carcass weight basis in late July, early August to the low 60s, $63 at the low about 4 weeks ago, and now we've recovered over half of that drop and back up around $80. So a lot of volatility in the markets, and right now we're headed the right direction. As far as on the feed costs, we've had the same type of situation. We've had soybean meal at times above $550 a ton, and corn prices close to $8.50 a bushel, and lately it's been more like $7.40 a bushel, so a lot of volatility in the markets.
What's your prognosis as you look at feed costs over the next few months?
Well, you know, one of the interesting things, if you look in the futures market, it's not offering any carry. That is, the prices aren't higher in the spring than they are now. Somebody's got to figure out some encouragement for someone to store this crop and own it from now till spring. So I'm kind of expecting the futures market to rally a bit and put in place some incentive to carry corn past the end of this year. So perhaps a little bit higher feed costs come early 2013 than what we've got here during harvest.
For the time being, fourth quarter overall, what are you looking at per head? I'm guessing you're going to tell me it's a loss.
Yeah, it's a pretty safe bet, Jeff. Probably somewhere $40, maybe $45 per head loss. It's a little bit better than what we thought. I think a month ago I talked about $50 per head loss. So it's feed costs have backed down a bit, and certainly this improvement in hog prices is encouraging also.
Exports have been strong, but with the tight supply that's bound to happen here, what do you see going forward with exports?
Oh, it's been a pretty good year. Through August, we're up 9% on pork exports compared to a year ago, and last year was an all-time record, so that's not a bad number. We did very well in the fourth quarter of 2011 on exports, so we're probably going to end up the year maybe only up 5% or so compared to last year on pork exports. But
does Asian demand concern you at all, Ron?
Well, we were very concerned about China demand, but it's still hanging in strong. So right now we're feeling fairly good about it.
All right, what do you expect to see for consumers? When do you expect them to see that price increase over the store?
Well, September pork prices was down from the month before, down from a year ago. Usually about a month lag, so it's probably going to be our 1st of November before we start to see increase in pork prices based upon what's happened at the farm level lately.
Is there an opportunity here for pork with tight beef supplies? Is there an opportunity for chicken to take a little bit of the market share?
Well, yeah, you bring up a good issue, Jeff. If you look at cattle numbers, slaughters down, it's going to continue to decline. And the calves don't grow up real fast, so we can predict cattle slaughter fairly accurately. And yes, if we can get some feed costs down and some profits in either broilers or pigs, they could well expand and fill in some of that void caused by a small cattle herd.
Price-wise, on the hog side, what are you looking at in the market over the next course of 4 weeks or so?
Well, if you look, normally prices are declining this time of year. If you're going to pick the odds on low price of the year for hogs, somewhere around the 1st of December. So normally you'd think from October to through November you'd be seeing a lower price, but I'm guessing maybe a little bit closer to stable prices this year.
If I asked you to look a year from now, so you're looking at next October, next November, what do you think the state of the industry is then?
Well, I hope it rains next summer and we get some feed costs down a little bit. We're going to have a smaller industry. The hog industry is cutting back fairing intentions for the 6 months beginning on September 1's down 2.1%. So the herd's cutting back. That's going to give us some higher prices. And if we have a good crop year next year, maybe get us back into the black. If we don't have an outstanding crop year, then we're probably going to be cutting that sow herd for a while.